Good morning, all. This is Fadi Hamzi. It's 8:33 a.m. Um, on Thursday, the 13th of January. I think this is our second one, right? Yeah, this is our second uh, morning brief with you guys this year. Hope you guys have had a good time off and good holiday. I'm under a little alert there on the COVID issues. 7 people in my cigar bar, plus 2 of the workers got it. I usually sit outside, but I'm going to get tested. This morning, I'm fully vaxxed and boosted, but we'll see. One of my doctors is saying calm. The other one says, we're going to get that test done now. I said, okay, calm down, guys. We'll get it done. We'll get it done. I've loaded up on zinc, vitamin C, and what's the other one they want me to have? Magnesium, yeah. So, which I usually do, but I boosted up yesterday. The amounts, and I'll do that later on today. Anyhow, let's get this show on the road. Welcome. As you know, these shows are reported on every recorded every Thursday, and they're posted on our YouTube channel and within half an hour or so. So best is to attend it if you're in a rush. If you're not in a rush, you can look at it on over there. Let's get started on housekeeping. A little bit busy recovering from the some of the coding stuff we've been up to. This latest is the Gamma ladder. It's used for fast markets, trading NQs, very tight behind you coverage, watching your back, and it scales up. It scales into a position, but it does your all risk management automatically, and you have a fixed loss of I think $300. A couple of them we ran. One of them live was 300 loss versus 40. Gave it 4,300. So decent risk reward. But you got to catch it right when it's moving. It is not for sideways. Sideways is used for testing only. It's a little bit easier to manage, look at the data, see what's going on. We're in that phase. We did release a new, I'm sorry, it's released to me a new automated day trading system. Not this one, the Elite. I'm sorry. This one, the Elite. Okay. It has to do with, well, we have these results are not going to be always kept up at that level. Volatility is changing, text is changing. So we have to, every once in a while, tweak it a little bit. So it's going to be called 4.103. Okay. The 3's number of contracts limited to 3 NQs or 30 MNQ. We urge you to test MNQs first. But 4.1 is here, not released yet. It's got to get testing. It's got to get tested. Problems that I've been more focused on the Gamma ladder. So we're doing that. Hi, Calvin. Welcome. So I've been looking at that for now. By the weekend, we should be done. Maybe by Monday, Tuesday, we'll post it and send the code out for the elite members. Post it in the chat room for the basic members. This one for the elite, they would get the code, but we're not there yet. Okay, that's our development schedule. Housekeeping. Aside from that, the new VM2 is working fine on the cloud, and so let's get to our market timing. Our first item is econ calendar. Let's go there. Actually, I have a gentleman, friend of mine, that I've known for about a year or so. Used to work for Federal Reserve Bank of Richmond. I've asked him to join us just for the econ part, for the econ reporting part in the chat room. He understands. He has actually a website that deals with econometric data, and he's a kind of a econ quant, so to help us there. But where the jobless claim came in, PPI came in 0.2. Yeah, that's nice. Yeah, we're edging up. Yeah, we see the NQs explode there. Came in 230 versus 205. I'm saying 205 as consensus. I can't remember what the revision was. Claim up 23, average 210. Yeah, not good or bad, but yeah, we got a lot of problems. PPI. Let's look at PPI quickly. By the way, Clarida quit, vice chair of Fed. I think he was pushed out. I was never impressed by him, but who am I? So okay, PPI 0.2 and so 4.97 year to year, still pretty strong. Yeah, X-Fuel Energy in line 8 and trade services. Okay. So the headline number is going to be 9.7 year to year, and but for the month we beat it slightly. Yeah, well, they're looking for a really flat relief rally any way they can. All right. Tomorrow we have retail sales. That's going to be important. That's a red report. Not too crazy about import-export prices. Industrial production, yes, sir, and then consumer sentiment. So we got a slew of them between 8:30 to 10 tomorrow. Harker, I forgot who he works for. Which is Federal Reserve. They are. Hold on, what's this? Yeah, hold on. I have it somewhere in here, but I have no clue right now. It's buried here somewhere in a lot of paperwork here that I'm behind. Yeah. So I know Williams is important. John Williams runs the Federal Reserve of New York. Those are the ones who actually get. There we go. They execute the Treasury orders. Who has Harker? Oh, he runs Philadelphia. Gotcha. Oh, okay. Yeah. Stephen Sobel is the name of the gentleman. He used to work for Richmond Fed. All right. Charlie Evans of Chicago speaks today. Tom Barkin, that's Richmond. That's it. Tom Barkin's of Richmond. Yeah. All right. I don't know if you guys got the 10-year auction yesterday. Yeah, it was. Of course, the rate was ballooned a little bit, but coupon rate was 35. But look at 1.73. This is what's matter. The actual yield because of discount. It's not the coupon. It's 1.73. The yield to maturity. So that was a little bit high. All right. That says to me, at the margin, I'm not an economist. I just had to learn a few things by default because of it being this business. At the margin, we're slightly moving up econ-wise. So, are we going to get some rate increases? Oh, I think you're going to see some this year. I think Karthik was saying is a 75% chance of one in March. So we'll see. I think they're going to be extremely cautious, but it won't be. But he needs to go through his confirmations hearings first. 0.25 or 50 is not going to change the difference. Interest expense. It's just a signal. Yeah, it's just a psychological signal. All right, let's go through charts. Sorry, 841. All right. Well, as you recall, we covered our shorts here right at that day, and we said we don't think the flush is here. We're going to see it shortly. And our Q, if you follow us on Twitter at Hamzy Analytics, would be SP2. Why SP2? I don't know, because it works. I don't know why, but it works. So it's done that since like 1998, 1999, yeah. So unless on a more primitive trade station, the code is the same. We have to recompile a couple of times. But our line in the sand was 25. We said it was trading, I believe, at the time, like 27. It was on that Wednesday. On that Wednesday, which is the I forget, was that FOMC? No, it was the minutes, right? That was the minutes, right? On the minutes, we said, listen, going into the non-farm, we said, listen, we're looking for 27 area. If it gets below 25, you're going to probably see the low. And now, as we opened on Monday, nothing happened during that time. If you look at the changes there, day-to-day mark-to-market, I think we were down 7 handles, something like that. It's very small. But Monday was a big swoosh down. Look where it went. The low was at -2 sigma. You know my work. You know I'm looking for -2 or -3 on the SPX, and never more than +2. That's +2. This is -2. This is -3. And the reading there was 13. This value there was 13. I mentioned it a couple of times on Twitter, but majority of the time was really on the headset to the chat room saying, guys, watch out, this could be it, this could be it. Why? Central Casting couldn't write the script as well. He went to 13, snapped, look with negative sigma, and put a hammer up. If that's not a buy, I don't know what it is. So mission accomplished? Absolutely. And of course, this was a huge day for me. Huge. Because we went down short, came back up long. We did not get the bottom. You never do. You know the bottom in rear view mirror. It's retrospect in retrospect. But so you get a little bit messy down there, right here, right? This area gets a little bit messy. But patience, patience, patience. As Admiral Tico teaches us, drink some tea and read some Ruby. So if it gets down there, you gotta get a little calm, let things happen. The smartest will prevail. They'll see the light. We saw the light here. We said this is a huge drop. We gotta book that. At the margin, I was not willing to lose this gain for the next two. And this one you cannot trade it for time and digest because that's close to close. Close of that day to the next close to the next close. There's no intraday with time and digest. So this is more actual live trading for yourself. And then we went to 0.6. Right now we're inside. That was yesterday. Was a tough day. Sausage. I expect today. What are we doing on the overnight? 1 second. Okay. Overnight we're up 8 and 35 and 6. So 8 on ES, 36 on NQ, 6 on Russell. Okay. Crude is down 46 cents. Yeah, at the 82 area. This is a February delivery. Yeah. So, which says, yeah, look, H is coming up. March is coming up. Yeah, we should be, by next week, early next week, we're going to be trading the H contract. All right. So, having said that, let's go back to our charts here. I think McClellan oscillators are about 62. Kind of neutral on breadth thrust. Looks like we're going to possibly pull up here on the CI. And of course, volume data is crucial. This is that day. You see that day? Yeah. Now, to me, that was not enough, but we had a reading of what? 3.35. Yeah, that's a 5 area. 3.35 ratio. So 3 times we're on the short side than long side. That usually creates a short shake. That mission was accomplished. All right. Nasdaq is leading. That's usually a little bit of a good sign. Nasdaq went to negative 3 sigma. Why? High beta. Fear and greed. Throw the baby with the bathwater. Okay. So moving forward, canaries. Just overall picture. I kind of want to look at this where we are, but that's not where I concentrate. I look at this instead. I look at the trender. Same names, but I want to see how far we are from 50 bar and 200 bar. Okay. So what do we got? Positive, positive, negative, negative, negative. So half of them are negative. Okay. And this is crucial to me. This is because we trade a lot of NQs. We trade a lot of Nasdaq-based both names and also Nasdaq futures, the aggregate. To me, what Russell is doing is absolutely crucial. The small, Russell 2000, the small caps. Are we going to see a W here or modified W? Or 2 W's together? I hope so. I don't know. Nobody knows. We'll see. This is this. If you want to get into high beta, there's nothing more than Russell. Very high beta. By the way, question that came up, a firm who's looking at our algo for NQ saying, why are you trading NQ? You should be looking at the ES. ES is deeper. No. I didn't want to say anything. These guys are good friends, and I don't want to be pompous and say something that it might hurt them. But they didn't realize ES is deeper because it doesn't go anywhere. We're day traders. We need the market to move. This back and forth feeling is for kids. That's how you get into trouble. What you want is using a burst. But you have to be fast on your feet. It's not for everybody. But you grab it and you get out. And you wait for the next setup. And so that's how our indicators have been tuned up for. You can write an indicator for any asset, or let's say asset class. Let's say for let's say all stocks. But from stock to stock, from index to index, let's say Russell versus Nasdaq or S&P or even transmission, they need to be fine tuned a little bit. You have to. So, having said that, you would see the best. The reason NQ is the best is because it has some liquidity, but not too much. Because if it does have too much liquidity, then it won't trend. It gets filled. No, I wanted to get the other side nervous. Yes. When I want to get the shorts nervous, I do put buy stops in. I act like I'm short, but I'm actually long. And it starts moving up, and then I hit a burst to push it up to that level. When that gets executed, there's short buy stops that they're short as protection gets hit, and it feeds itself. You can't do it with ES. ES is too deep. And if you do it, and you can't do it with Russell, there is no liquidity. The moves are going to be massive up and down for nothing. I don't want to do that. You lose your patience, you lose your mind, you lose your sanity with Russell. This is too illiquid. Russell is Russell. And the NDX is kind of middle of the way. ES is too liquid. It doesn't go anywhere. You just sit there. I'm not trying to come and sit here. I want to work 2 hours a day, 3 hours a day. Kill it and get out of the way. Then come back again. Now, is it tense? Yes. Does it exhaust me sometimes? Absolutely. And is it for everyone? Absolutely no. That's why for some of our clients, which I kind of says what's going on, I said, I gotta see your thing. I gotta see your questionnaire. I don't know you. Write down. Do your. Please fill the questionnaire. Send it to me. I'll get back with you. Hey Peter. Hi Michael. I'll get back to you. I want because I call them an interview. I want to make sure I know what they have experienced, what they've traded. But to me, you can't beat that. I think NDX is right in the middle between the craziness of Russell and high liquidity but low movement of ES. Okay. So because I'm not that patient. Listen, if I'm wrong, I want to know I'm wrong quickly. You see what I'm saying? I don't want to sit there and keep reading a novel. Now, some people do. No problem. I know some of you guys, you do love ES. Hey, I'm not judging you. More, to each to his own. Not judging you, but I'm just saying that I'm just airing out what I see. Okay. All right. What time is it? We got to hustle. 8:50. All right. Coming off 50 bar, where we stop where we are now, and there should be a decent bounce there. We'll see. Should we hit to a new high? Yes. Am I going to go long? Yes. I missed this one. I was pissed. That was, Monday. I should have gone long Monday night, but hold on. I'll explain to you what I'm waiting for. This is new highs and new lows. Forget new lows. They're not going to get much here. But new highs are kind of quiet. We haven't had a big peak here. So I think we have a chance to go up. Remember, when this skin pops up like that, this is the weekly. It gets that like that, you have a problem. So, and that's a while back. When is that? That's May. May, that's too far. 3 months forward, more than that, it's history. It's not going to impact you. The system is on a sell on a daily. The weekly is still long. Okay, I do think we're going to go and take this out. My goal for this year on S&P should be 5,500 on S&P. So, but that's the whole year. Oh, farther out. Oh, the earnings season is here. Tomorrow, I believe, is or is it this afternoon? Tomorrow morning, JPM. First salvo. That's what I want. I don't think it's the first bank, but I like it because it's the 7th on the S&P 500 on market cap basis. So, and I like Jamie. I've met him a couple of times, and Jamie Dimon. I like to see how he delivers, and he's a no-nonsense manager. No BS. He calls it as it is. He doesn't care who's in the office. He speaks his mind. So, and they've done very, very well. So more power to them. We'll watch what they do tomorrow. But that's the first salvo in earnings season. I think this timing is perfect in going to earnings season. To be on the long side. Nancy Scott, our Airbus, she manages our the detail of our option stuff. We talk a couple of times a day, maybe a little bit longer sometimes. She's got a few in the works. She's added a couple yesterday. As you know, we use the scanner. This is it, the scanner that goes through the names, sorts things out, and we have the bubbles and so on and so forth. We have moon bubbles, and then we have option charts. She has an exact copy. She runs them for you on the option side. So That's our game plan. 1 second. Murray, what happened? Hold on. Where's my mouse? There we go. Okay, there we go. And then we run these two charts. As we change names, let's say go to Tesla. And you go. I remember I'm top of each other on the page for you. My apologies. Here's your Tesla. Goes to Tesla. So we run it side by side on two monitors, so you could see what's going on. And dailies because of fear and greed levels, and also weekly to give us a sigma level of where we are. Tesla is running up. Tesla is going to be 1500 area, at least 1400 plus. That's my read. Now, when I don't know. That's not a concrete prediction. It's just a sentiment. So I'll watch for it carefully. Walls, quiet walls, ticking down a little bit. I don't like OVX. Forget it. This is G. Okay. This is far more important. We're at 23 vol. This is the VXN. So it's a NASDAQ volatility, and it's a pure vol measurement. This is the old VIX that Dr. Let's see, Dr. Whaley did, not this garbage that's tradable by people on the floor and manipulated. Yeah, I don't like VIX. Mathematically, it's not pure. So RVX is the same thing. That's also the same as the old VIX for NASDAQ. This is for Russell. We're at 24, so we're kind of okay there. I'd like to see a little bit lower for a run-up. Past 20 on VXN, I think you got to trial up. Yeah, trial up Houston. Yeah, going through max Q. To me, max Q is about 21 here on the NASDAQ VIX. No need to pay attention to it too much. I would put an alert on it on a level on your screen by sound or flashing of what the value is. But once a day, a couple of times a week, has to be watched. What the pattern is. Right now, this 1 sigma is negative. It's 21 negative. I'm saying negative 1 sigma. This level. I'm looking for 21. By the time he gets down there, this number is going to be a little bit lower. Okay, remember, because of they feed each other in terms of computation. SQ, yeah, where SQ says the big boys have said, hold on. Okay, the big boys have said we're done for now for the downside. That's what this is doing. Why? Probably earnings season, and we have this run up. If you notice, before it, they were saying we're going to go up. I'm saying we're going to go down. Remember, before it says we're going to go. If this goes up, his market is going to go down. It did. Okay, look at that. Boom, 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 boom. We went short about here. Remember, about here or here we went short. And of course, was this comforting? No. But look what it did. Yeah. All right. TD. Again, short-term timing. We missed the rendezvous here on the stock RSI. The spread. Oh, I had a mistake in it one day. Oh, the data was off. Why? I forgot to change this to ES. H22 was showing Z21. So I wasn't plotting these. I went through the code. You don't know what I went through. See why it's not working? Because when you feed two items together, remember TradeStation. Yes, it's the Rolls Royce or a Bentley of platforms, but you're in the same range. If the other one is stop trading, because it's a futures, stop trading at the end of a contract, you're not going to plot the other one. And all we did was modify the sigma channel to look at the differential. That's the spread. VIX spread is a very popular tool for hedges. They use it quite a bit. I think probably exclusively. I don't see a Bob and Pop going there looking at this. I don't trade myself. It's not my realm, but I use it as an indicator. And we had a peak there. And that day, as this thing is rising, I'm alerted in the room saying, guys, we're getting up there. Our goal was to see zero. We did not. Now, part of that, you went to 2.5 area. Typically, when we get to negative to zero, dropping, the negativity gets to zero. That's the low. Part of this could be COVID, because we're in a different vol regime, if you think of it. So we always had to add, since March of 2020, we had to put a little alert, delta in. I have taken that out. I may have to put it back in. Obviously, this is a good example where you do have a tradable low, but look at it, it's not zero. In the years past, it was always zero, very near zero. So we have to add a filter there to say, for time being, shift this a tad. We'll see. I have to look at it. In fact, I don't have extra time. Just really went to bed at 1 last night. Finished work at 11. Oh, yeah, it's not easy. I'm tired. I'm exhausted. You know, I need a day or two off. Where I work Saturday and Sunday too. Only time off was watch a couple of football games with my buddies. That was it. That was my only time off. And some of them are Trumpkin. It's not easy. Exhausting because of the IQs. Yeah, the IQs are exhausting. Yes. Yes. So, I don't mean about all Trumpkins. I know there are a few of them you're sitting here. I don't mean about all Trumpkins, but some of them are. Yeah, the IQ there is exacting. Yes. All right. So let's see. Let's go to the next chart. We're done with the charts here. Treasuries. I'm sorry, treasuries. Okay. You see what's happening on short term. All right. All right. So we're up a little bit on the short term. We're at monthly. What do you call it? This SPR level. That's a MR3 already. So, well, remember they're kind of small. Why? It's function of a prior month was squeezed there during December, so these levels are a little bit closer to each other, but we're already there. These trade very technically. Okay. Now this says we should be pulling back up. We'll see. Very news driven. So I wouldn't apply all technical analysis rules when you get to the yields because they're very news driven. So we drop down here again. Look at the highest again. This is a weekly. I'm sorry. This is a monthly resistance 3, 2, 1, pivot, support 1, support 2, support 3. All right, 10-year housing, cars, 5-year. So you can see where we are. Edging up. Of course, this was the latest auction. I'm saying it was 1.7 something. Yeah, that's it. I don't know what 30-year auction is. Maybe it's today or tomorrow. I forgot, but I would watch for that. Let me come back here. All right, so where's the 30-year, Jack? That's a 20-year. Oh, that's an announcement. That's not an auction. Is it next? Is it Peter Green would know? He's a bond guy and a smart one at that. Maybe it's next week that they do the 30-year. Yeah, so it's not here. All right. Let me bring. By the way, let me bring the questions up, Nancy. Okay, thank you. Thanks, Nancy. I appreciate that. So, 9 o'clock. We got to move forward. Okay. I used to concentrate a lot on the 30-year. I learned more that what's really more crucial is the 10. Maybe because I used to trade the 30-year, the futures. But really, this has got more of a pulse. This is much bigger. The 30-year is much bigger, but it is what it is. This is the QSIP. Yeah. All right. Let's go to up and down volume. All right. As you know, I made a comment on Twitter saying I'm looking for a 90% down on this, and then I want to get long. I don't think we have seen the low, but I'm not sure it's going to be right now. Unless what? Unless we have a surprise on the earnings. If our earnings come in as a surprise, then you're going to see that. And I'm looking for this line to cross negative 90 down here. I post this often during the day, like once or twice a day, as much as the time I get. My buddy Bo Natvik, he used to be last year in our chat room. Their family runs a big painting operation, believe it or not. And he's got a huge mansion as a job. And he's actually been there like 2 years. Imagine painting a mansion. He's been there 2 years. He trades from the construction site, yeah. And so when I go and say, I pull up Sarah Palin saying, from my house I can see this level. He goes, my bucket truck is not here. Let me go to the roof. And goes there, gives you a picture. Beautiful Naples coast. And you can see the workers all that. You see the size of the property. And he gives his prediction. Anyhow, he's the one who turned me on into this. Over lunch at Brooks Burgers, and then, of course, courtesy of Admiral Tico, he hosted a lunch. He pulled out his credit card, very benevolent of Admiral Tico, to pay for our lunches. We went through that in detail. Of course, there's some papers to read on Paul Desmond, the guy who came up with this, part of Lowry Research Corporation. If you want to add to your market timing tools, I urge you to take a look at it. You can but Paul has passed away, but he used to come to our user group in LA. But you can look that up. Paul Desmond, Desmond, and there's some white papers on him. Lowry Research Corp, and then there's Lowry also Capital Management. Just like us, there's two divisions. One is your research and indicators and all that. The other one is capital management. So ours is HA and TCM, Tico Capital Management, and of course Admiral Tico is the chairman of the board. Yeah. So having said that, we hit 90 up and we're pulling back. That was that must have been on Murray. That must have been on Tuesday. Right. Yeah, yesterday was tough. Yesterday was just up and down, up and down. I said that at the open in the morning. I said to everybody, guys, I don't expect it to go anywhere today. It's going to be difficult. Why? Exhausting. People are not going to participate. Volume was low, and it's Wednesday. You know, our system shows Wednesday is its worst day. Well, it's difficult for a system. How could it be easy for a person? What was I thinking? I don't know. So I had a tough day. Fine, it teaches me a lesson. You as was it Louis Porcelino said, one of the biggest S&P traders I knew personally. He says, "Love your losers. Love your losers. You're gonna learn from them. You're not gonna learn from the ones who went well, because the ego comes in, other attitude, this, that, and say, oh yeah, it was easy. Actually, stress-wise, probably this was the worst day, Monday, but because long, I came in long at the beginning was good. Then a little bit short was good. Then I went long again. I'm saying, I came in neutral, obviously, because day trade. Went short was good. Then it bounced. I went long, but I missed my exit. It rotated, and then boom, sank. It's like an elevator. Like an elevator losing its cable. It sank. I sat there like a chump. I said, oh, Jesus. But it went to a level I was looking for. I said, I'm going to buy this and hold on. Then I started adding on the bottom and held back. The run-up was massive. That was one of my best days in a long, long time. And then I'm using the Gamma ladder, not the release version, and because the calculation for the risk reward of where your stop should be, I was looking by hand on the HP10. I think it's HP10. Yeah, it's HP10 B2. Yeah, BII. Yeah, two normal numerals. I was doing it by left hand, looking at the screen. My right hand's on the mouse. Exhausting. Imagine you do that for like 3 hours. But I'm telling myself, and no lunch. All I had was some tea. I said, Farry, lunch is for wimps. Why don't you just concentrate here? This could be a good day. But I didn't believe the results. I mean, I was rubbing my eyes. It's just boom, boom, boom. Grew. It was incredible. Today, yesterday, I gave some back. That's okay. There's no way you're going to win them all. That's all it is. So, but I'm looking for a 90 negative test down here on this for the ES. It's difficult to do it on NDX. I like to watch NDX. I'm teaching myself on that. But all the research is done on ES, or I should say SPX. So, and this is NYSE up and down volume. Yeah. And the code is simple. It's actually, Lowry explains it. I had it off. It is close to what this code is, but I think it's a little bit better. It's more comprehensive, and it's calculated easily. So we post that. Now, I'm not saying this is going to come tomorrow, because where we are and where we're in the calendar. You have econ calendar. I mean, I'm saying, wait, you have a quarterly earnings calendar coming up. This was a COVID related. That was a massive COVID because all of a sudden Omicron just exploded. Listen, we're at 1 million plus cases a day right now. Massive. And you can see some countries in Europe are shutting down partially, or think about even going further than that. But hopefully we'll do better here. But something else will push us down there, then that will be a very good buy. It could be also, it could hit us not at this level. It could hit that ratio could hit us somewhere higher, but it's the lower end of the range. Okay, remember, look at this. So you have a range there. These are lows. That's a low. That's a low. So it's all relative. You have to look at what I call the geometry, the market geometry. It'll tell us. Bollinger Bands, center line 50, 200, all-time high. Very simple. You can write that code yourself. Nothing fancy. Every time it makes a new high, so I want to know where we are. If I'm right, first we're going to take these out, and then we're going to come back down. And then that will be a 90, and then it will be another buy. So when we get to some exhaustion, Go get rid of your Bauer stocks. Get rid of your high vol, low liquidity stocks because you're going to get into trouble. Okay, that's all. All right. What else do I have for you guys? Okay, overnight. Let's go to overnight. Remember, you can run multiple desktop. This is what I do now. Buy bigger screens, okay, and then divide it software-wise. Yeah. Rather than buy little ones, you have to connect everything to stand. One cable doesn't work. I don't know what. I'm too old for hardware headaches. I'm too busy with the TCM. I gotta manage the money, not to worry about hardware stuff. So, yeah, this what you're seeing here right now. Okay, actually, I'm sitting here, but running these three. There's a big machine came there replacing that, and a bigger screen. These four are in the hallway. They're going out. If anybody needs extra monitors, I have them. Come on, pick them up. They're fairly good. They're HDMIs. No, yes, HDMI and what do you call it? And DVI, I believe, yeah. But these four are gone. The problem we had was my front end. I put this as a front end over here. I wanted a bigger, better machine there for execution as a backup to i9. This is the i9 there. This is the 65-inch. This is the one. This is the killer. You can manage a lot of money with that, and very fast. And also, this is what you guys use for NQ. Okay, the ES runs from there. The OTF. This is an NQ. So, and this is the chat rooms. So, okay, keep them separate. Chinese model. That means little tasks for each. Don't load up. Don't buy a big machine and load it up. Smaller machines, individual, so you don't go down all the way. And each one has their own UPS. You see the UPS is down below. Having said that, let's get back to here. What have we done overnight? Hold on. Okay. Where's that chart? And then we wrap this. It's 8, 9, 10. We got to run. Yeah. I got to go take care of my admiral before he fires me. Okay, that's the options. Let's go to overnight. Okay. Here where we are. We're edging up. CPI. Just a little relief landing there. Wow. Murray, this was an expensive webinar. I should have been here. All right. Oh, well. Dennis, I'll send you an invoice. No worries. You can afford it. Farmally, yeah. He can afford it. I'll send it to you. So he's a diehard Republican. He can afford it. I'll send you an invoice. There we go. So I'm diehard too, but I'm not as rich as he is. I'm a poor dumb immigrant, so just got off the boat. Yeah. Let's see. So we're at 73, 74. Always look at percentages a little bit easier on me. On 0.40. Okay. All right. So that's a CPI relief value. Well, I'm sorry, PPI, I guess. PPI relief value. CPI was yesterday, correct? Yeah. Okay. Any questions for me? Yeah. Okay. Any questions for me, guys? Again, these you sign up once it rotates it moves it forward. On go to webinar. Thank you for attending. Any feedback, I appreciate that. As you know, we're on Twitter, and this is our open feed. We post quite a bit there. And what is this? Oh, Jesus. What the hell is this? Okay, no. Out of here, Jack. Block up here. Thank you. And I answer my questions daily. I do. I don't let it go back. Now, if somebody does something crazy, I don't have time to argue. Eject. Remember what do you call it? James Bond with the Aston Martin. Yeah, the passenger seat has ejection seat on it. Done. All right. Okay. We'll see you next week, next Thursday. I'm going to close this webinar so we can start the post processing and get it posted for everyone out there on our YouTube channel, Hamzy Alex. Thank you. Good day and good luck.